Probably heard about the company Moderna at least once before. They're one of the fastest to develop a vaccine for COVID-19, but after getting the FDA's emergency use authorization, it did what was most likely to happen: sell off hard. And I mean hard. But anyway, in today's video, I'm gonna teach you a strategy in catching stocks that are very beaten down so you can profit from these moves in the future. What's happening, traders? If you're new here, please subscribe and hit that notification bell so you get notified every time I post a new video. Also, you will get 4 free stocks if you use the link down in the description below. Sign up to Webull and deposit $100. The catalyst for this is just the price action, but more of that in a minute. We don't consider the filings in this case since this is just plainly price action, but just to make sure, we'll check the filings and the other news that might affect the stock fundamentally from December 9. So let's see any major news after December 9. There are none. There are no major news that affects the stock fundamentally. The filings is the same. There are no filings that affects the stock, so the trade thesis here is plainly price action. Then we draw our lines. First, we have here our all-time high. Then, as you know, I love putting where the VWAP ended on the highest volume day. And you can see repeating levels. We have here our trend line. Actually have one here, but as you can see, this is just 1, 2, 3 days before it crosses it above. So I prefer stocks that are very beaten down more than 2 weeks or 3 weeks. We have here our downtrend line. Before we proceed in how I manage the trade, let's just step back for a while and get the context why these strategies happen. First, I'm gonna show you some stocks that exhibited the same pattern and what they did. One stock at the top of my head is DKNG, and draw our line. But this is just from October 5 to October 22. As you can see here, we have our first bottom and the succeeding bottoms are lower. So this doesn't really provide me the signal that this is already reversing. If we then proceed looking at this, it still goes lower. So I might revisit this in a couple of days. Now it's giving us the confirmation of a lower high. So I'll use that in my drawing and see if there's a pattern lining up. This is a very nice example of holding the same level after breaking the trend line. This here, you could argue that this also made a higher low, but this is what happens in this strategy. If you're wrong, you just have to cut it right away. Then we see here again, this is starting to base out. This is probably the level you'll take your stop. We broke the trend line. We can see already 2 points trying to break out of this moving average. And we also have the trend line break and the consolidation of the prior lows. At this point, you can really enter here, putting up filler sizes or maximum size, and with the risk just below this or even this one. This is a confirmation of a higher low. You can just trail your stop. So we have here a very nice trend line. So you can trail your stop after breaking this. You just have to see the price action where it bases and just trail your stop there. So might possibly at 40.88. That's your trade right there. This is just the bounce. So we don't care what happens afterwards. We'll also check with SQ because I remember SQ having this type of pattern before. I believe this was it. November 26 to December 31. So I'm just gonna use Thinkorswim's on-demand feature. So the scaling of the daily chart is much better. I have here the chart from November 29. So what I do when I draw trend lines is I plot the highs and see where the highs are repeating. So we can see here, this is 1, this is 2, this is 3, 4, 5, but these are just erratic moves of the trend. If we draw the trend line based on that, we can really see here that it doesn't really make sense. For me at least, you have to draw the trend based on the most number of points confirming that trend. Just like the example with DKNG, we might doubt an entry right here, since this is not a confirmation of a base, this is not a higher low. Now, looking at this, we have the base, we have the confirmation of the bottom, we have a possible break again of the trend line, because if this doesn't break the trend line, then it will break these lows. It won't hold these lows. But as you can see, we now have our higher low. Although this has a wick, it got reclaimed, it got supported, and I see this as a confirmation of the higher low. And here, right around here, we also see the strong push of the price action. So you can enter this pre-market with a low possibly around 61.5. Since I don't want, if I enter it right around here, I don't want it to go back to even 61 or 60. And I'm gonna take this at 61.5 as my stop. There, this is the confirmation. So again, we now move our stop right around 62.89. Now we can see here there's a trend. After breaking a trend, I'm looking to trail this above since the bounce has already been made. After setting up the trend, we can see here that this is again a higher low. So we change our trend line again based on the levels that we're seeing as the price action progresses. Another trend line break, and at this point I might trail this right around 66.6. I had to move the time of the on-demand forward, and our trail stop was not yet hit. And as you can see here, it is still going above. And now we can see a clear bottom at 68. And remember, our stop here, our trailing stop here wasn't hit yet. So at this point, wherever you sell your shares, you're already in the money. One thing I can share to you is don't place your stops at obvious levels like 68, especially right at the open where the movement is very erratic. You need to put your stops below, like for this one, you can see here some consolidations. I'll probably use that. Those consolidations or levels that are not very obvious. So let's say 67.29. The low of this is 67.55. I will not explain this much further, but as you can see, the bounce is very nice on this case. Our trailing stops weren't even hit, and it goes on from there. So what happened in mRNA was that dumb money tries to find the next shiny stock. So it can be Bitcoin or the SPI, BNGO, those which ran up a couple of percentages on a single day. So the only ones watching stocks like mRNA, which was then a very, very shiny stock, was those bag holders or those who are not selling the stock yet, even though they are very, very down in the red. And what happens is, if their max pain point is reached, they then sell. And when all of that selling pressure has disappeared, the stock then gets a balance between supply and demand, and there's a high chance that it will reverse, and that's an opportunity or entry, given that the stock did not change fundamentally. That's a very key term. The stock did not change fundamentally. So we can see here in the beginning, there's sellers early taking control. These sellers might be taking profits from those who bought lower, so they're selling off their shares. This can also be short sellers trying to profit from stock trending down, or this might be those bag holders I was talking about selling for a loss. But we can see clearly that sellers are in control. If we can zoom it here, you can see that there's an imbalance in supply, because if there was a balance between supply and demand, this stock wouldn't have been going lower. So you have here the low about 133 and the high of about 148. So at this point, we can see that this is trading in a channel, and clearly the supply and demand at this point is more or less balanced from 133 and 148. And after some time, it breaks the 133 point again. So you can see that sellers are really in control, and I don't like trying to enter reversals on days where they sell off in a small amount of time. So in this case, 3 days. What I want is those very long downtrending stocks. That was the idea why I was stalking this stock for over a month. So as you know, I was watching this for the break of the downtrend line, and I entered here on this day, January 4th, on the day that it first broke. But this is just partial. This is just feeler sizes. You know, I don't enter a stock right at the beginning with full size. I entered this partially to get a feel of the stock, how it moves, and to basically just put it in my radar. We had a very nice trend up the following day, but then it slammed back down on January 5th. But I was not shaken out yet. I had my stop below this, because if my trade thesis was correct, then the price shouldn't go back down here. So I have this sell off on the next day, right at the market. After the market closes, it then reclaimed. I like this move, confirming my trade thesis. And then very next day, I then added to full size with the risk below here. So this confirms my higher low, and if it goes back down below 106, then my trade thesis is invalid. So we have here the following day, it trends up again. I like it very much for my position. The following day, if you watched my previous swing trading idea, I had my first target at 118. So I waited a little bit longer and sold some at 120. Then at the open, it then spiked. I sold again at 122 for, I believe, half or most of my size. And then I set my stop around 114, because right when I sold most of my shares, I didn't expect this to go back down to 114. If the stock is strong and I can still maximize my profits in this, you can see here the low of the first candle was about 117. We have a line here around 116. You can see here at the top, the support. So 114 was kind of conservative for me. So I let it ride and just set my stop at 114. If I got stopped out, then that's it. That's the trade. But if it continues to go higher, I was thinking of selling around 128 and finally holding some at 140 plus or 150. So I didn't expect this to sell off this hard on that day. I set my stop 114 before I went to sleep, and the very next morning I got stopped out I was expecting this to consolidate around 100, above 120s, which was why this is very unfortunate though, but I still got the win. And today's January 13, so basically January 12 market time, and it's still going up and reclaimed that 120 plus that I was expecting. But I'm out of the trade already, and I'm very happy with how I managed this. Do you see yourself using this strategy in the future or not? Tell me in the comment section down below. If you think this video provides value, please hit the like button and don't forget to subscribe and hit that notification bell. Please follow me on Twitter if you want to get free trading ideas on the days I don't post videos. And with that being said, respect risk and continue to hustle, trade, and invest.